we found it way more attractive for the product and for our customers if this is kind of like human created. It's still machine intelligence at the end, right? Because it's still the system taking your chat in the middle of the night where nobody is working at the bank. But as a result, what we do is just like 100% traceable, repeatable, and predictable, which are exactly the things an LLM is very bad at.
This is Converge, a podcast from Rivero. Come with us as we shape the future of finance.
Welcome back to another episode of Converge, live from the show floor at Money 2020 in Amsterdam. And I happen to be joined by an old friend of the show, Thomas Mueller, co-founder and CEO of Rivero, who was on the show last year. Welcome back, Thomas. And we also have Thomas's co-founder and head of growth at Rivero, Fatemeh Nikayin. Nice to have you here, Fatemeh. Thanks so much for joining, both of you. So what's been happening with Rivero since we last spoke? How's business been going? I've been hearing good things.
Yeah, it's been really great. First of all, thank you so much for having us back on the show.
Great to have you.
It has been fun last time. So we were very excited when you asked us to come back again. So the last 12 months have been a very busy time for us. A lot of things have happened. The company has grown quite a bit since then. I think at least 10 more employees have started during that time. We also are now operating in some additional markets. I believe in total 7 different countries where our customers come from. So that has been really, really great. And of course, also important to mention that we were able to do a Series A late last year, which of course now gives us a lot of opportunity to accelerate our growth even further.
Can you just remind our listeners, for those who didn't hear the first episode, a little bit about Rivero, what you guys specialize in, what your focus is?
Sure, absolutely. So what we do is we build software as a service solutions for the financial industry, focusing primarily on the card issuing space. So that means our customers are issuing banks, and we help them in the domain of card payment operations.
And what's the split in your customer base between fintechs and traditional banks or financial service players?
Yeah, so we focus pretty much on the licenses of payment networks. So that means issuing banks and acquiring banks. But our main and primary focus is mainly on the issuing side, which includes the more established banks, but also BaaS players such as NFUs or issuing processing providers such as Paymentology. The reason that we are more focused on the issuing side and more the established banks is primarily because with our product, we solve problems that more the established banks, they have to deal with. So it's more relevant for them.
Yeah, makes sense. We just spoke with Paymentology before you guys were here. So this is a great segue into similar topics. But we know, I also addressed this to Jeff, the CEO of Paymentology, but we talked about how it's been a couple tough years for many fintechs with VC capital, and investors are sort of had a shifting focus towards more sustainable business rather than growth at all costs and, move fast, break things, which was the mantra of the previous decade. So how have you seen that play out in your arena?
In fact, I think in a way we actually benefited from that shift in that domain because when we first tested the waters about doing a VC round some 2 years ago, we probably didn't fall into what was back then considered to be, the best investment hypotheses. Because if you do B2B SaaS products and your customers are banks, you have very long lead cycles, and therefore it's hard to show, those crazy 200-300% growth figures that people wanted to see. However, this time around, because of exactly what you said, it was really night and day because, all of a sudden, the solid business model we had mattered a lot. Also, the fact that we managed with a lot of capital efficiency to actually break even mid of last year really helped us to put together our round. In fact, the round was even oversubscribed, and so we were in the very fortunate position to at the end kind of like choose with whom we want to work with. And now we are incredibly happy with the investors we have on our side.
Amazing. So there's two sides to your business. There's fraud recovery and dispute management and compliance on the well, fraud recovery and dispute manage on one, and then compliance on the other. So what are the major trends that you're seeing on the fraud side first, and how quickly is that space evolving? Or is it sort of largely the same types of fraud you're seeing, but just at a larger scale?
So I would say overall, it hasn't substantially changed. I think you still see very similar fraud patterns that we had a year ago. I would say, however, also in card payments, maybe one of the things that has shifted ever so slightly is that since with the introduction of strong cardholder authentication or strong customer authentication, it has become harder for fraudsters to just steal or phish your credentials. Mm-hmm. And that has led to somewhat of a shift towards more like the scam type of fraud, right? Where you are essentially being tricked to pay the wrong person in a way. Mm-hmm. However, what we see has changed significantly since last year is the increase of fraud in the non-card payment area, and especially talking about the open banking and the account-to-account space. Maybe you're familiar with the situation in the UK, right? They struggle quite strongly with all of these so-called APP fraud, which is essentially all about these scams that I mentioned. And I think that is also kind of like a great reminder of what can happen if you basically launch a new payment method that essentially is just a shortcut to like a wire transfer, right? To a faster payments in case of the UK, without from the beginning kind of like introduce consumer protection rules. And now even the regulators stepped in the UK to try to kind of like rectify that and force these payment service providers to also put a dispute management in place essentially. So that is certainly a big change, I think, from what we would be talking about 12 months ago.
Yeah. On the compliance side, you help customers deal with that necessary paperwork to stay compliant with the changing rules and requirements of payment networks, which are very much always in flux. Obviously, compliance is becoming an increasing overhead for a lot of payment providers. So do you also help with things like PCI DSS, the industry data standards, which have just had, from what I understand, they've had a major revision to them. Is that right?
So when it comes to compliance with our solution, Kayo, we primarily focus on a scheme compliance with payment networks such as Visa, MasterCard, but also other premium schemes like JCB, Amex, etc. Mm-hmm. So working in the payment industry, we knew that this special domain of scheme compliance have been heavily overlooked. And that's why we decided to build a solution that help banks to deal with that niche part of the compliance, but not the more overall compliance in payment industry. So with that, we try to stay focused in that domain and help bank to gain efficiency in that domain. We don't know, maybe in the future we add additional modules to our solution to cover other compliance domain, but at the moment our focus is pretty much the payment networks.
I see. Given your experience of the European market, would you say there's a heavier burden of compliance and regulation than in the US and other geographies? For example, after the Wirecard scandal, BaFin, the Germany regulator, started to put limits on fintech startups that wanted to scale rapidly. Is that a burden in the world in which you operate? And is it, obviously we talked about the move fast and break things of the past decade. That wasn't really a part of the European market. Is it a problem that there's such a stringent compliance ethos, or is it something that hasn't really been a limiter in your view?
I would say my intuition says yes, but we are not expert in the more global compliance topic. We are very much focused on the payment network side, which which in a way for us is an advantage because both our product, we build them based on the rules of the payment networks, which makes it easy for us to sell it tomorrow, I don't know, in Asia or the US. So we don't need to change much to our product when it comes to moving to different markets or not impacted by compliance topic. But I would say, generally speaking, in the European market and Switzerland, where we are currently active in, we see that banks are more and more concerned about security, privacy, compliance topic, and that's for sure impacts the ease of process, basically, with the banks in the sales process. What we have been fortunate so far is that we built our product pretty much with this security and privacy mindset of the banks in mind. And that has helped us a lot in conversation with banks, because if you talk with banks and you have an answer to all those questions about compliance and security and privacy, then that makes it much easier to work with them.
So, Thomas, when you joined us last year, we spoke about the EPI, which is the European Payments Initiative. It's Europe's equivalent of FedNow in the US, which launched in July. And since then, the first account-to-account instant payment transactions with EPI's instant payment solution have been made between consumers in Germany and France. How are things developing in your view? Is it becoming clearer that the role that EPI will play versus established players like PayPal, Visa, MasterCard? Has that picture become clearer?
I would say it's still way too early to tell if they will be successful with their grand ambition. I mean, they are only about to really launch the peer-to-peer functionality of their Rivero wallet later this year in summer. And then I assume shortly after, probably e-commerce and maybe eventually even point of sale, right? So there's still a lot to happen to really even start rivaling other solutions. And I would say, telling from experience of like similar, sometimes other, even though domestic initiatives, I would say it will take at least 2 to 3 years to see if they get anywhere close to their ambition of augmenting the dominant players. I think they are also outspoken about the fact that they don't even try to kind of like get rid of the other ones, right? Because they will very likely be limited to the European scope and never go global. However, what I certainly do see as a very positive development is that the EPI seems to not just focus on what we often call the happy case, meaning just, paying, but also all the things that can go wrong in the context of transacting, right? So in one topic that, of course, is very close to what we do at Rivero is the domain of consumer protection. And there what we see is quite some positive movement that the EPI really tries to not just be a new payment method, but also be basically a payment scheme, and also introduce these needed rules for how to deal with scenarios if something goes wrong, right? If you have fraud, if you have a dispute with the merchant and so on. And it really seems like maybe they also took a look at what is currently happening in the UK with the APP fraud and APP scams, and probably took some lessons from that. And I think that would be, in my opinion, quite crucial to really rival the other payment methods, because I believe consumers will only adopt the new payment method if they also feel they're well protected. Especially one of the important markets for the EPI is Germany. PayPal is very successful in Germany because of the PayPal buyer protection. So I believe they need to at least be on par with PayPal, even better if they are on par with MasterCard and Visa or card payments in general.
Right. Yeah, well, makes sense. Well, just to close things out, I of course want to get your opinion. You're in the fraud recovery and dispute management space. Automation is touching every part of fintech and financial services. Increases in automation go hand in hand with AI technology, which helps support that. Also in line with all of that is the development of even more 24/7 payment rails, which can come through the integration of blockchain technology. So I'm wondering, how are you folks at Rivero looking at the emergence of both AI, blockchain, and even others that I may not have mentioned as part of your future roadmap and what your clients are asking for? What are you hearing and what are you thinking strategically?
Yeah, sure. Maybe starting with AI, or maybe even there more specifically the large language models everybody is exciting about these days. I think it's great. It's very powerful technology. We probably all kind of like use it in our daily lives, right? I think ChatGPT and similar things are great assistants to kind of like augment our human power, and I think everyone should make use of it.
I certainly do.
I think most people do at this stage. However, I'm somewhat reserved, I would say, when it comes to just trying to answer kind of like every problem in the payment space with large language models. Interestingly, so one of our two products, which is Amico, that's the solution for fraud recovery and dispute management, also has this component that interacts with the cardholder, the consumer. And it is a chatbot. And so maybe naturally we get asked quite often whether that is powered by a large language model. And then we always say like, no, it's actually even better. It's powered by human intelligence. Because we feel like this is a field where actually using language models would probably make the product worse, not better. Because I think language models are amazing when you operate on a huge amount of data. And if it's all about very generic domains, then it's impressive what these models can already do. However, if you look at the domain of dispute management that follows pretty clearly defined rules by MasterCard and Visa, we found it way more attractive for the product and for our customers if this is kind of like human created. It's still machine intelligence at the end, right? Because it's still the system taking your chat in the middle of the night where nobody is working at the bank. But as a result, what we do is just like 100% traceable, repeatable, and predictable, which are exactly the things an LLM is very bad at, right?
Yeah.
And we also feel more recently from a conversation with some banks that ultimately also banks wouldn't be comfortable even putting such a AI technology at the forefront, maybe also based on some things that have happened. Maybe you have seen in the news that Air Canada, I believe, or one of the airlines, they had the problem that their chatbot, which was powered by a language model, actually hallucinated and made up a refund rule that didn't exist. And so then eventually that customer would take legal action, and Air Canada lost the case because also there they made the case, well, it's your chatbot and whatever that outputs to your customer is your liability. And I think that probably now makes the financial industry and banks even more reluctant. I mean, it's super powerful to use it maybe in the back office. Yeah. That's also probably where we will bring it to the products first. But to use it at the interface towards the customer, I would be careful with that, at least as the technology stands currently.
Mm-hmm. Yeah, I mean, I did mention also blockchain because the parallel use of blockchain with AI is interesting for a lot of people because it brings that the provability to AI versus real human distinctions, so that you can distinguish between what's actually authentic and what is artificial. So I think there's probably some co-applications of those two technologies that will make a lot of sense in financial services in the future. And I'm sure I'm sure folks are thinking about that in compliance, because we're thinking of it as well, and it's really an interesting duo of technology growth, and that's fast growing, and also could have a huge impact on the way we move money. So, well, without further ado, if you do you have any final thoughts you want to share? Any news coming up that we should be aware of?
We of course always try to take things forward. So we, like I mentioned at the beginning, right? I think this year is all about expanding across Europe, right? There's a lot of markets that we also not active yet.
Yeah.
And so, probably great to meet again in a year.
Yeah,
and,
we'll
see how far we have come.
Exactly. That's the joy of this podcast is I get to see all of you grow and flourish out there in the big global marketplace. So best of luck to both of you, and thanks for joining.
Thank you.
Thank you so much, and thanks for having us.
My pleasure.